And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, traders and other Web 2.0 enthusiasts. Welcome back to the Coach's Playbook. Today is Tuesday, February 8th, 2022. Thanks for joining us. So we got a question in the chat yesterday in another YouTube stream that we did from a trader who said, I was in a trade. I was getting close to my profit target. The market turned and came back and chased out my stop. My winning trade turned into a losing trade. What's the best way to exit a trade when you're close to your profit target, but it doesn't hit and the market starts to move against you? So today we're going to talk a little bit about locking in profits and trying to avoid situations like that.
I know John already has an answer for that specific question with an example.
Excellent. Well, before we do that, Mick, you got a funded trader shout out for us?
I do. Big shout out to Fuyan Chang, up $4,700 today trading the equities. It's a big day. I also want to do a shout out to one of my friends, Troy Passion, out there in Hawaii, up $1,600 today. So good job, you guys.
Oh, excellent.
Awesome.
Thanks for sharing. All right, well, let's get to it. Mick was pretty excited to have Hogue lead us off here, I think. So Hogue, why don't you take us away?
Well, sure. And this is one of the most common questions and problems that I think traders have. You get a trade on, it goes your way, gets close to your profit target, doesn't quite get there, and then turns around and hits your stop. One of the ways that I've learned to combat that is I have a 10% rule. If the if price is within 10% of my profit target, I can take it and call it a full profit target hit. Managing trades is one of the hardest things that we do, I think, as traders, because we don't get any smarter once we put the trade on. But anytime you get close, it's almost like a putt. You got to take the gimme.
Yeah, I couldn't agree more. There's another variation of that too, which I sometimes put in practice. Get a little timer and set it on your desk next to you. Once you get inside that 10%, hit the timer, give yourself 15 minutes. If after 15 minutes, your target doesn't hit, then you just exit at the market, move on to the next trade. It's just another way to play that same scenario. How about you, Danny? What do you think?
Well, yeah, one thing I really want to add to this too is, you got to keep in mind what type of trader you are, right? 10%. If you're trying to be quick and scalping, if that's your style, it's never going to work. I think all four of us can sit here and be pretty confident saying scalping is not a long-term strategy that's going to keep you successful. It's looking for those bigger opportunities. JD's talking, set a timer for 15 minutes when you're inside that 10%. That's realistic. That's what's going to help you kind of keep this going over time. For me, when it comes into locking profits, I'm pretty comfortable. I kind of factor in that 10% right off the bat from what my profit target's going to be. I like just to sit back and let things happen. I'll put my stop up there or my profit target up there, and I'll just kind of sit back. And as I watch it, as it starts getting closer, if I'm looking close enough, I'll pay attention to a little bit of order flow, watch how that volume's coming in. If I continue to see that volume pushing in, it all again goes back to the basic principles of volume. If market's moving in a direction and volume continues to come in, then you should expect that market to continue in that direction. And that's where you can kind of play that game of like, okay, I really like this. I actually have good momentum going to the upside. I'm going to peel my stop or my profit target off, but then I'll put in a different stop. That's when I can start to consider bringing my stop up. I think that's what I like to think about a lot of times. I love runners. I love letting my winners run and sitting back and just watching that P&L continue to rise. But then that's where we want to start to look at where's my best place to put my stop. And really for me, that really comes down to just some technical areas. What's the markets, what the chart's telling me? Where was the last point that I believe if this market comes to, direction can change. I'll let it pull back to a certain level, but beyond that, to me, market states telling me, hey, this thing's looking for rotation back the other direction. So for me, that's really what I like to look for. I like to look for those points of, hey, I'm going to bring my stop up. You can call it a trailing stop. You can call it a protective stop. You can call it kind of whatever you want. I just like to lock in profits and make sure I'm not giving too much up. And then on the flip side, if you're trading with some size, when you start to see the market approaching those profit targets, don't ever hesitate to take a little bit off. Maybe you take off 50% of what you got on. You can take that off. You can let the other one run. You can keep that stop all the way at your break-even point. And that's actually going to make sure you're ensuring profits. And now you have a winner that you can let run. And that trade's never going to turn negative for you.
Right. And something else, when you're moving stops, I know people like to put in a break-even stop or scratch trades. I personally despise scratching trades. In the real world, you still got to pay commission. So when you move that stop, when you get 50-60% in your trade and you're moving your stop up to break even, give yourself an extra tick or two, just to cover those commissions and costs. Mick, what's your take on it?
Got a lot of takes on it. Agree with everything John and Danny said. I like that stuff a lot. I think the first thing we need to talk about is anytime you're putting a trade on, you should have an idea of where you're getting out if you're correct and the market goes in your favor, and where you're getting out if you're wrong. Since we're talking about profits today, in hindsight, it's always going to be very easy to say coulda, woulda, shoulda. You always are smarter when you see what the market actually did. And, I've been in this position before. I hear it from other traders, if I just didn't do this and I held on to it, I would add X amount more, or, any excuse. When you see it in what happens in hindsight, it's easy to say that you did things wrong. So that being said, every trade is going to be a little bit different, even if you're executing the same strategy and, managing a trade with the same style. You'll have different outcomes. Some will, play out very good. Oh, I sold it at the high tick, or I bought it at the low to cover. But the most important thing with how you manage a winning trade is consistency. Because consistency is something that's going to help you over time, as opposed to acting, doing things differently per trade. You want to have a consistent approach. That way, you can be very happy with the winners that you managed well. And you can also be happy with, saying that you did the right thing, even if you could have gotten a little bit more out of the trade. So the consistent approach, I think, is the most important thing. Danny talked about, trade going in your favor. You've got more than one contract on. Now, absolutely, you can peel trades off. Anytime you peel off a portion of a winning position, you're doing two things. You're locking in profit. That's what we're here for. But you're also limiting risk on the rest of that position too. You're taking risk off and pocketing money. This is a really good thing, especially as, trades get a little bit longer in the tooth as they continue on. Your odds of continuation might go down a little bit. So there's something to think about there. I also think about money management, and this is primarily what I think about when it comes to taking profits. So if I frame out a trade ahead of time, I'm going to buy it here. This is where I'm going to sell it if it gets to that level, because I think that's where it can go to. Let's say I'm expecting to make $2,000 on the trade. Well, if from a money management standpoint, it's always good to, take a couple steps forward and only take one step back. So you might find yourself in a trade where you're up, $1,000. Let's say you're up 1,000 or you're up 2,000. You can manage this trade from a strictly money management standpoint, where if it doesn't reach your profit target, let's say you got $2,000 in the trade, you still haven't reached your profit target, but that market starts coming back towards your average position where you bought it. If you were at one point up 2,000 on the trade, and now you find yourself only up $1,000, you could say, you know what, I'm going to close this trade out. I had $2,000 in it. Now I only have $1,000 in it. I've taken 2 steps forward, and I'm only allowing myself to take 1 step back. Yes, it's not the equity high that this trade once had. However, I'm still up $1,000 on the trade, and $1,000 is good money on any trade. So in certain situations, I'd be very content saying, you know what, walking away up $1,000. I've got more money in my account than I did prior to this trade, and I managed it well. I've done that in situations where, I cover the trade, lock in half of the profits that I had at one point, and then it would have stopped me out, or it would have gone back to break even. And then there's other outcomes where, you cover the trade only up 1,000 after being up 2,000, and then it goes in your favor to where you would have hit your profit target. And, I'm always okay if that happens, because I take a consistent approach, and my methodology, my process, I have to be able to say, you know what, I did the right thing there, even if I could have had more money. Because doing the right thing and doing something consistently, if you think about how many sessions we have in a single year, or in, multiple years, there's tons of opportunities for trades. So I'm never going to get hung up on one in particular.
There's one thing I really want to add that I love what Mick touched on. I do want to add this too. When you're thinking about a profit target, it's not just an arbitrary location. You've got to do some prep and plan of why you think the market's going to get there. You can't just jump in. Let's say, your profit target, you're looking to make $1,000, right? You can't just say, hey, my profit target's $1,000 and I'm going to sit in this trade until it gets there. It has to be based off of market research and understanding what the market's doing, right? That's the one thing I did want to add to this. I don't think we've touched on yet, but I wanted to make sure that's clear. It's not some arbitrary location. You have to plan that out.
Yeah, thanks for mentioning that, Danny. Because like I said, you can manage it from a money standpoint. If I was up X amount, I'm going to make sure I walk away up at least this amount. But, as the market trades toward your profit target, you should also be watching the price action and asking yourself, are we pushing up there nicely? Are the buyers still more aggressive here, or are we seeing some resistance? And if you're seeing some resistance, then you might say, you know what, I don't know what's going to happen. This thing could fall back to where I put it on, or worse. So making your own interpretations of what you're seeing in the market. If it looks like it's stopped going up, then cover the trade. Don't just sit there and wait and hope for it to hit a profit target that you had pre-established when you have new information coming in that's telling you it might not actually do that.
Go ahead.
So, one of the things that I think it's really important is trade management is an art form, and it's never perfect. If you're trying to be perfect in your trade management, if you're trying to be perfect in your exits and trying to manage trades perfectly, it just doesn't happen. There's always going to be something new, always going to be something different. There's always going to be something to regret with everything that you do. If you take the profit target and it goes another 40 points your way, you regret not moving the profit target. You don't take the profit target, you don't take the profit when it's there, and the profit goes away, you regret not taking the profit. There's no perfection, and there's no right or wrong way. So we talked about 2 steps forward, 1 step back. What about, if I'm looking to take 3-to-1 reward to risk on this trade, what if it comes back to 2-to-1? Lots of different ways to do it, lots of different ways to look at it. None of them are perfect.
Great advice. Yeah, I remember a trader once saying in the bond pit, I'd rather lose $10,000 than make $100. Meaning, like, when you take the risk, you got to go for it all. But not every trade you put on is going to be a home run. Each trade needs to be managed not differently, but like Mick said, sort of conservatively and efficiently. So take that for what it is. Anything else you guys want to add? Mick, I see you lining up.
Yeah, chomping at the bit here. There's nothing worse than letting a significantly profitable winning trade go from being profitable to turning into a losing trade. You can, make your own definition for what significant profits are. For some traders, a $400 winning trade might be significant. For other traders, it might be a $4,000 winning trade. But your job as a trader, or someone, who manages money and manages risk, is never let a significant winner turn to a loser. You have to separate, managing the trade and doing it smartly with your desire for profits. I've seen a lot of people go up $3,000 on the day to down $3,000 on the day, and it's inexcusable.
Do you want to just touch on a few questions here? Frozen's got a question. Frozen, we actually just did a podcast about 2 weeks ago that was all about stops. So it really breaks down your question here much more in depth than we'd get to today. So I highly recommend go check that out. And Joshua, I would recommend just contact our support team. We won't be able to help you out with that one. So just contact support. You can give us a call or shoot an email over there. I just want to give you guys an update.
Cool. I just realized I left out a key part of that little story I told. When that guy said, I'd rather lose 10,000 than make $100. The guy who ran my trading group that I traded for turned to me and said, don't ever listen to a word that guy says. Wanted to make that point clear.
I think that's our quote for the day almost.
If you want to leave it at that, let's do it. All right, I guess we'll wrap it up then. Hogue, you want to close us out?
Is that our quote for the day?
Is that our quote?
I do have a quote from Warren Buffett that I think is worth noting here.
All right.
This all revolves around patience, right? Waiting for our profits to be met. And Warren Buffett says the stock market is a device for transferring money from the impatient to the patient. So be patient. Wait for your market to play out. Don't feel like you got to rush to take that first dollar you see.
Great quote.
Great quote. Excellent.
Great
All right,
quote.
Hogue. Now let's close it out.
All right. Again, trade management is an imperfect art form. I've been trying to find a way to do it perfectly for 30 years. It's hard to come by. So be forgiving, take profits. Remember, every putt that you leave short of the hole doesn't fall. So you got to be able to take profits. It's part of the game. Trade well.